The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour, 10 o'clock, 10:06 on Thursday, the 12th of September. Wow, moving to September so quickly. Let me just do this right now. The Dow trading down 169 at 40,691. That was an absolutely fabulous turnaround yesterday. The day before, so Tuesday, we had a small red Chapman wave Roman candle. I said, if we go halfway into the wick, that's part of this technique, there's a really good chance that we will go to the lower part of that candle and test it. Well, we didn't just do that. We went down about 700 points after a little bit of a gap up opening, or at least a rally attempt. And then what happened? We had that fantastic turnaround. And that was just under 40,000 in the Dow. And the Dow screamed back, actually closed up 107%. That's with all those Dow stocks that were really giving bad signals, UNH and the others. But in fact, what happened was we closed up. So we usually give back some of that, but we still made a higher high than yesterday. So on a purely technical basis, even though I've used a phantom peak to get that peak D, for a sell signal at 41,585 on the 29th of August. I only correctly identified it after that because we had that strong Monday, was it Tuesday slump. This is going to be important, and I still believe that there's a pattern that's unfolding, and it could take some time to unfold, and that is a potential cup and a handle, not a cup and ladle, which is the Chapman wave, one of the most fantastic patterns, because if it takes out the left side high that was made at a major top at D, E, or F, pulls back, and then leg B or C takes that previous high out, that 41,376 round number high on the 18th of July, that can give you a cup and ladle with a really sharp, powerful move. We didn't get that. We got that phantom peak, which I had to use right there. That I think it was the 18th and 19th of August. Almost exact high, and that gave us a D, which said, okay, that means you've used a phantom peak, you've pulled back. Now, that doesn't mean to say you can't make that regular D. It means that the next all-time high is one in the next couple of weeks, above 41,585, has to then be considered maybe a new buy signal or the old one continuing. So it gets a little complicated here, but there's really nothing to do because the 9-period moving average is still positive. It can switch by the end of the day. It could go pink, and that'll be a negative. Right now it's green, and that's a positive. Looking at the weekly chart, we made a leg D, a leg C going to a peak C. There should be a leg D, so there should be higher highs to come in the next couple of weeks in the weekly chart, and we're already in a leg E in the monthly chart. Now you see this instant restart, a very strong move in this leg E, maybe E/A, can negate that as an instant restart, saying that you're probably not going to go to a D, another buy signal to a D, but you could go E, F, and G, and that's where you have to be really careful. Meantime, back at the ranch, I just want to do something here. Let me take a second to see if that's going to work. Not yet. Okay. There, have a little patience. I think we'll get there. Even more importantly, looking at the S&P, the S&P right now made a peak C1, C2, which acted like a peak D. Did identify that after that big sharp pullback. And now what we're looking at is we've got a gray leg A on the upside. I call it gray because we haven't confirmed anything yet. And more importantly, I just want to do something here. Okay. More importantly, that weekly chart, remember those Groucho Marx eyebrows, that V-shaped pattern? Well, the sooner that it takes out that left side high, the high of in the 56.51 area, the better, because it says that now you can even consider that that's a brand new leg B. I mean, that's going to be really important. Most significant is that we've had the, I'm going to do this now. I'm doing this as if it was a Monday, because we've had such a whippy period. And yesterday we were closed at TFNN as they got to the new studio. Look at this inside track repellent zone. You've got a price movement that keeps bumping into this pink line and the green line, this narrow, little tiny mini channel that I call the inside track repellent zone. If at any point we start to significantly push away to the upside, it makes this whole area go all the way down to 5,100. 5,100. Major support. I'm talking about intermediate term. So this is going to be a really important couple of months coming into I would even say going into the election period, beginning of November. But back at the ranch, what we are looking at right now is that the retest yesterday, successful retest of the left side low. This, I'm going to take a little moment here. I've got a whole bunch of questions, but this to me is really important because I believe that we are in a positive bias, unlike the very negative bias that a lot of analysts have been talking about. I'm still looking at this very positively. I could be completely wrong. That's not the point. The point is that the left side low, 5402.62 on the 6th of September, and the retest yesterday of 54.06.96 makes the potential H pattern maybe, and I'm saying maybe because we really don't know, turning into a cup formation, and that cup formation matches the handle, what we're looking at in the Dow, and says there's a chance, very bumpy, but making higher highs and higher lows. The day is so young. It's really, I shouldn't be talking about this, but I am, because that pink 9-period moving average, if there's another good session today and another good session tomorrow, that pink 9-period moving average will turn green and help us retest the highs. I don't want to go there too much. I just want to say that's the potential, but absolutely, this candle says in the next 2 days, including today and tomorrow, if it's a trade that holds the S&P below 54, let me give you the exact number, 54.60, it's going to retest the low, and that'll be a very negative action. Right now, this is a very good scene. Now, I promised that we had the TFNN was closed yesterday, but I was in the den. I was doing a lot of things in the den, and I wanted to discuss one thing that's really important. I can't remember if I did this, but I said at the close yesterday that it was the close yesterday at 4 o'clock, right? So today's the 12th. So that was yesterday at peak D, right there. At a peak D, I said there's a chance that we could be in a very narrow trading band all night. And it could be like a 10-point. And look at this. We're in a trading band, and then it went slightly higher, made another trading band. Then we pull back. And when did we pull back to almost the 200-period moving average? Where are we now? In a very nice move to the upside. All right. With that said, the day is young, and I'll be back. And if we want to talk about Q's, IWM, the gold, the silver, copper, BLT.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back, and I just need to change something here because at 552 level, I don't want anything to do it haphazardly, no. So that's good. So I'll just give me 1 second here because I need to, I missed it, damn it. I don't know what I'm doing here. I just got added. Okay. All right, that's the trouble with doing two things at once. I got in here when the 9 p.m. moving average crossed over at 55.52. And I made a mistake, and I just got out at about 71. I wanted to stay, and I thought it would be a 2-click session, and I wanted to have just 2 clicks. Now I've just clicked. So, all right, sorry about that. Let me just get back to our story here. So the Dow's had a very nice turn to the upside. That's what we're anticipating today. And most importantly, we want to go to the QQQ because it's kind of been lagging. It's just taking out the Chapman wave. This is the falling axe formation, took out the resistance. Days young, it's up 174 at 470. But this is the one that I'm really anxious about because the IWM is up 97 cents at 209.89. I really would like the IWM and the SMHs to be in sync and move together. Now, we had a trade on the SMHs for the very first time. We went long in ages and ages and ages. And it got stopped out. I should have given it room to the downside. I just didn't want to do that. But the SMHs, for the first time in semiconductors, looked like this is the first time that there could be follow-through strength for the first time in a couple of weeks. We'll see the days young. They are up 23 cents at 233.66. Just a tiny loss, but that's the way it is. And I have to deal with that. Let me just get back to this for the moment. I want to see any questions. No Basil charts? Is that correct? Are there no charts? Let me just ask my. I'm looking at charts. Wait, I'm seeing charts in Tiger YouTube. There should be charts. Let me just ask my engineer. Al, are there charts in the den? Can they see them? Skype 1. Wait, no, this is. No, all right. I'll have to. Someone. So, are others not seeing charts in the den? Let me go back to the den. Charts are good. Yeah, I think the charts are good. So, and it's really important. I hope you can see the charts because it's really important that we focus on a bunch of things here. One of them is I'd spoken about the IWM, the SMHs. The other is that we have got within the context now, this is going to be really important, within the context of the currencies, you've got, look, the dollar is a little bit weak here, down 17 ticks. You go to the EUR, USD, the euro-dollar currency pair, it's making lower lows and lower highs. You go to the USD JPY, that is the yen, not doing what, it's very much like the dollar. So the currencies are not quite in play. What is in play is gold. Gold is up very nicely, up 30 at 2573. This 2573 area takes us out. It's all-time high. It's a leg D with a leg C in the daily chart. Chapman, very easy technique. And once in a while, you'll suddenly bump into something that says, uh-oh. Now you've got to do a little bit more thinking. But if you identify the lowest low bar and count each successively higher peak, and that means if it makes a peak and then under it makes other peaks, you've got to count everything, single peak from the starting point. That's this particular low right here back in July, around about just on 2400. That's peak A. That is peak A as well, but it's under that A. So you've got two A's, and this goes to a B. That goes to a little A and a B underneath that previous B. Then it pulls back and whoops, it goes to an overlapping C. That's usually good, and it says that you should go to a D. And yes, in the weekly chart, we finally snuck out of this Chapman Wave inside track repellent zone. That's the reason why we want to be holding the golds. One of our, in our portfolio, we've got the gold stock. I can't believe that I did that dumb thing and just got stopped out of that nice position that we had. And here it is going, oh, well, it'll pull back. We'll have another chance using techniques that we've developed. Okay. Within that context, what I am looking at here is that silver, you remember silver didn't have as good a chart. The silver, type it right here. The silver chart was lagging. Now it's starting to come back. Now what happens is, and you could do this as a trade, you could actually now get something in the silver area because the silver should play catch up to the gold, and gold will have a little bit of a pullback. Then they both rally a little bit more, and then gold comes tumbling down, and then silver follows. They have this tag team. So this is an A, and look, here's your starting point right here. I'm going to put an up arrow. I shouldn't really because it's not in a buy mode yet. Just for clarification, let's just say right there, trough E, trough F, and from that 20.60 low of the 8th of August, it goes peak A, peak B. Then it pulls back sharply. This goes gray A. It's gray because it's under the previous high. So it's gray A. I'm going to change the color right now. And a gray B. If this single leg B goes all the way over that previous B, then it becomes a C. If this pulls back and then together it goes above the high here, it becomes an overlapping C because then it becomes a new C, and then it picks up the old C. That says it should still go to a D. All right? Weekly chart, lower lows, lower highs, got a lot of work to do. Look at Bitcoin, BTC. Bitcoin, I'd said back here in March, I said, I think we made a peak F in the weekly chart. I'm calling it a leg C in the monthly chart. The previous all-time high, we just snuck above it. I suspect that this is a buy mode that should go back to a leg D higher than all of those peaks. But in the meantime, I've got a sell signal that says it could go to a sell mode, which it's in, and it should be making lower lows and lower highs, which is exactly what Bitcoin is doing. It's stuck in a range. It hasn't broken down per se. If you look at the monthly chart, it's a pullback. But if you look at it building a cause for the move to the upside, it needs a little more time. Now, if you don't mind, I need to do this. I promised myself I'm not going to let opportunities slip by. So this is pulling back, this is pulling back. Okay. All right. My mind is now sort of unfocused. If I was just buying and holding and not doing anything for the next couple of hours, that would be nice, but it isn't the case. All right, let's go to high-grade copper. High-grade copper, as we're making lower lows and lower highs, and all of a sudden, yesterday had a green candle with a higher low, but not a higher high until it had a higher high, but it didn't hold that high into the close. Today it spiked higher. This is a potential double bottom. I have to tell you, I like what I'm seeing in this market. I think there's a pattern unfolding that, if I'm correct in identifying correctly in the Chapman methodology, that we could be looking at a trading band that's building upside momentum to break to the upside again. But it's going to be a process. And I love to look at a process and say, the process that's unfolding right now is swinging between different areas. And those areas, for instance, Caterpillar was doing so well, and then all of a sudden, Caterpillar pulls back sharply from its peak D. But look at that monthly chart, weekly chart. This is a cup formation. It should try to get back to the 360s, or 337 right now. A slow motion process. I'll be right back. Dow's down 20.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. So we were looking at Bitcoin, and I said that I thought Bitcoin would be still digesting gains, but I do see it going higher a little later in the year. Caterpillar having a nice day, up 261 at 337.61, but it has pulled back quite sharply, and that pink 9-period moving average needs to get become green again. We're looking at, if I'm correct, we're looking at, Cintas. So questions came in. So Cintas had a split. I had to read you all the notation. Didn't take me long. Cintas making an all-time high today at 207.49. This is uniforms and rentals. So as I see it, as long as Cintas, I've used this for decades. I've used it as a kind of a proxy, a kind of a barometer for our market conditions, etc. As long as it's making new highs, I think that's a good sign. I usually put it together with Marriott. I haven't even looked at Marriott for a little while. Well, you can see by the chart, I haven't looked at it for a couple of weeks. A, B, C, D, E, F, peak F, holding the 200-period moving average at 229, the all-time high back in the 250s in April. That's quite a way to go. So, yeah, that's a good sign. What we are looking at here is, I also want you to look at areas that, now, for instance, SIG. No, that's Signet. I don't want to look at Signet. Wow, what a good move up. GIS. GIS, I had a question a few days ago, and I did discuss it, and then I forgot to come back to it. So this is in the defensive area. Not defense, that's not a Raytheon, but defensive area. This is where money seems to flow when, let me just get rid of this because that's a notational change. Money seems to flow there into the defensive area like Coca-Cola, General Mills, Procter & Gamble, when things are getting a little shaky. So here we are. This is peak A. So the bar that makes the high cannot have the high except at a peak D. So here's a Chapman of red Roman candle. Within 2 sessions, if it can close sharply above the high, that's really important. If within 2 sessions it starts to trade for, in a shorter time frame, below the middle part of the wick, that's a problem because it'll retest. Well, this did the exact positive thing. It went peak A. There's another A. So it's an overlapping wave. B, C. So I can't remember who asked. I'm sorry, I didn't get to it the other day. This is General Mills. And the question was, is this something to buy and hold? I've been holding it, and I wish I knew, 10, I think it was. Been holding since the 60 or 50, 56 area, I think it is. I would do nothing right now other than this. It's gone from 56 to 75, just under, let me see what the exact high is. General Mills, 75.90. It's trading right now 72.08. It is starting to turn down, but the 9-period moving average is still very strong. Now, what I would say to you is, I've got this as a leg B to the upside in the weekly chart, but I have to, because it didn't take out the left side low, the starting point back at 60 in October of last year, I have no choice but to call this an alternate count, E/B. So your daily is going to give you the information. Oh man, look at this S&P. Now it's at 35.74, and I made a mistake. Got out at 71. I wanted a 2-click session, do nothing for the rest of the day, except hold it until the close. All right, what can I say? A, B, C in the monthly chart. Yeah, so it's pulled back. I would just say, for money management purposes, right here, if you've really got a good profit, I take something off. Just part of that whole money management thing, I take something off. Why? Because within the context of the rotation through the different sectors, if the tech sector in September, October really comes back strong, later this month, or it's maybe even starting now. Microsoft's done quite nicely, but they're really mixed. Then I would say to you, why not take a little bit off here and keep it? Where do I get really nervous? What's this, a fill? No way. Oh, man. I'm getting out. I don't know what I did. All I tell you is I'm getting out. Oh, get out, get out, get out. Oh, just as well I heard that. I had no idea what I did. I got full somewhere. Oh, it actually made me a little money, but I got full. That's terrible. That's embarrassing. All right. So what we're looking at is 72.21. If it starts to trade for a day and then bounces off the 70.58 area, that's okay. If it closes under 70, if it closes under 70, I take a little bit more off. But right now, I'd hold that. What happened? Something happened. Now the Dow is down 96, S&P's down 4. You see what happens? Luck. It was pure luck that I was out, and now it's quite a bit lower than where I had it before. I mean, how can you tell about these things? Isn't that amazing? So, that's a nice report right there. Okay, now let's get back to our story. So that's the General Mills. Sorry if I was a little bit fuzzy then, jumping all over the show. Okay, next question came in GE. Yes, so GE's had a spectacular move. It actually made another all-time high, just 177.20 back in July, pulls back and then goes just under it at 175. Now it's having a good day. GE is a superior company. It used to be possibly one of the worst with Immelt from the moment he started. I mean, he just, I don't know. He should not have been rewarded with all those different multi-million things that he got. No, I mean, that was not, he really ran that company into the ground. Well, it's now a different company and it's doing things very nicely. Yeah, I could digest. I've been talking about this for months now, since April. I think it's in a big digestive phase before it goes to its next big move up. But that can continue a little longer. So that's GE. I spoke about Caterpillar. Question came in about Robinhood. HOOG is trading right now up at 21.36, up 73 cents, making a beautiful cup formation right here. Thanks for the comment. Yeah, but I put in stops when I have the time. Sometimes it takes me a little while, and then it's a little late to be putting in stops. But I do my best always. As I put it in, I should have it automated, but I don't. I like to do it physically. So look at this retest of Hood's high that was made. That's a recovery high back around about the 26 and the 21s, and today it's at 21.44. I like this action. It's doing very nice. Oh, I should mention that we are long.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model? when you're already spending your energy looking for any possible trade opportunities. Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're back, and just I had a question about Southern Copper. SCCO is the symbol, up 2.23, up at 98.68 right now. So let me update the chart since I haven't updated. It doesn't do it automatically. I am the chart updater. So that's a peak D. I always put a plus sign above a peak D in the daily. The next high is called an E. That's how you go, alphabetically, sequentially, A, B, C, D, E, F, G. But it's a D, that other things can happen. That's why you can get the either overlapping wave or a change of notation. And that becomes a peak right there, around just under 108, pulls back sharply, holds the left side low, has a good rally, and it's above the 200-period moving average. So at 98.73, the weekly chart, see that plus sign? I always start a D off of the plus sign, and then I put a down arrow or an up arrow if it's according to the what happens after that. And now what we're looking at is within the context of this arch formation. So the question is, would you buy it here? I would say I need to wait. That 9-period moving average is so sharply under the 14 that it's going to take quite a bit. It has to have a very successful 102 to 103. Maybe 101.60 would start to get that pink 9-period moving. It's at 98.65 right now. It really has to get nicely into the hundreds, and then that 9-period moving average. So it would be a starter position. So I know that in your case, I don't believe you use options. I think you're going to have time. Let me go to FCX, which is Freeport McMoran. They kind of changed. Yep, look, they kind of trade together. That D gets a down arrow right there in the daily. I had already put the E in the down arrow in the weekly chart. I know what I can do. I know that you don't have any problem starting positions and adding to positions or keeping a stop in place, etc. So I'm going to say SCCO, it's a little early, but if it can bounce sharply here, then it can pull back and hold the 94 support. So I'm going to suggest just get your foot in the door, and knowing that that 200 period moving average is like a magnet right now at 98. So just nibble on it right now at 98.60. I wouldn't do more than that. I can easily add to it if it goes green with a 9-period moving average. I can easily take that off. But just as a starter position, that H pattern in the weekly chart makes me a little nervous because it looks to me like that left side low at about 90 is going to be tested over the next 2 weeks. I would like it to move higher right now, so it gives you some breathing room, so that maybe it doesn't. You can make higher lows. You could use this as a trend line support right now, right here, right there. And that just says Chapman wave inside track. How it holds in this area, if it does pull back, is going to be very important. And that will be between 94 to 95 and 3. Let's call it 96. All right. So that's the way I'm looking at it. Actually, if you asked me, would I start a position right now? I'd say no. There's just too much going on. This is a really, well, look at yesterday's action. Yesterday's action was what normally would have been like almost 3 to 5 sessions all in one. So I'm just saying, be careful. Now, the other question I had, now let me just double check. Yes. Okay, you'll wait. I appreciate you saying that. And I'll tell you this. I would start the position if it goes above today's high of 99.73, either today or tomorrow. Why? Because it's filling the gap. And then that gap says once it's filled, it can go a little higher before it retests the gap. So that's the way I'd be looking at it. All right, we'll be back in a moment tomorrow at some of these other stocks in that sector. Another question, where did it go? Oh, NVIDIA, EVDA, NVIDIA. Yeah, nice move. This is the reason why I thought, hey, the semis have been beaten so badly that they could have a retracement failure and see what happens. Look, now it's coming back. It's only down 2 cents at 233. I wasn't prepared to have to be. We had a tiny stop, 3 times long with a 1.5%, I think it was, but not even 2% stop, and it was a small position. So yeah, I don't feel badly about that. I feel badly about 2 things. One is I had small cap. For instance, we had a low price stock. That cheap is not low price. Low price is low price. Yesterday that we bought, it was making a leg D. And I thought, okay, if it pulls back in D, you've got to be careful. But if it makes a new high in D and then pulls back, that's what we want. And we want it on a sharp dip, which we got. But the market pulled back so sharply that it dragged it to our stop. We got stopped out. And now it is coming back so nicely. I feel so upset about that because I really wanted to keep it, but we do have stops in place. You know, we've got stops because it's better to take a small loss and then get back in. You can have 2 small losses because when you get it right, it can be really strong and very good. So that's my feeling. I just for subscribers, sometimes I can do it, but most of the time I just don't want. I learned a long time ago. If I make a mistake, get out. You can always come back. If I make a mistake and the price comes back to where it was, my thinking is, besides all the tax consequences or anything like that, my feeling is to get out and get a brand new position if you think it's what you want to buy at the same price. It doesn't matter. Or immediately you put in a fixed stop because you missed the time before. Now you better put in a stop so that you do money management. That's the way I like to look at it. All right, so UNG, was there natural gas Wednesday? Is natural gas not Thursday? Oh, it was out earlier. Natural gas storage out earlier. Nice candle in UNG. I've been liking this for a little while now. I mentioned that that arch formation, dreaded H, that went to, I'll do tomorrow's Chapman wave technical analysis day, went to the 12.58 low on the 5th of August, went higher. It went to 12.80, I think it was. 1271. And I love those double bottoms. And now it's got a right side successful test of the H pattern. If UNG closes, I've got this as going to the 15th of August high. This is natural gas at 15.22. I have it going to 15.22 by the 19th of September. That's this cup formation after successful dreaded H. I could be wrong, but that's what I had. And I always had it as a play for subscribers. Because early, if this, there's nothing just farther. And the winter time's coming. If this is going to succeed, UNG could go to the 16s quite soon.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just to finish up with this UNG, the support is in the 1420 to 1390 area, and this is the United States Natural Gas Fund. And it was a successful arch formation in the weekly, so that's A. And we're looking to see if it can make a B above that high that I was talking about in the low 15s. But look at that monthly chart. It's just, it looks like a 3 times long ETF that usually, the price gets recalculated every day. So I'm just looking at this and I'm saying, wow, this is terrible. So I'm not going to use that. I'd rather look at the natural gas contract itself, which is exactly the same. Very ugly, very ugly, very ugly. And so for natural gas, just to get halfway, halfway into that black 14-period moving average at 3.12 and it's trading at 2.32. That's the pink 9-period moving average at 2.634. That's going to be a big deal. So yeah, so just on a short-term basis, I'm going to hand you over to Steve Rhodes in a moment. Great programming here. I'll be back with Tom a little later on. What we are looking at is that the Dow made a higher high today. That was important, and it's suggesting that the weekly chart over a period of a couple of weeks, it could be quite a few weeks, should make a higher high and get into the 42,000s. Is that wishful thinking? I don't know, but we'll see. In the meantime, back at the ranch, what we do have is the Dow is down 41, the S&P's up 11, and sector by sector is trying to have a counter-trend rally. I think we're in a digestive phase. It can go on for a little while longer, and with that, specific stocks are doing quite well, and that's really the way you have to look at it. You have to be very specific and general at the same time. General for the big picture, specific for trades that you want to take in the very short term. We have nice positions. We're looking at some of those positions holding well, and we'll see if that lasts all the way through October. Have a wonderful rest of the day. I'll see you a little later, and stay tuned for Steve and all the great programming. Check out both.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guide